In this video, I'm going to be discussing whether or not you should be buying a home in 2020 in the middle of a recession. And no, I'm not just talking about interest rates. I'm actually going to be breaking down the top 8 home buying considerations you should be thinking about right now. Let's get to it. What's going on, good people, and welcome back to another video by Swan Financial. So if you're watching this video, you're probably here because you're curious about whether now is a good time to buy a house or not. Well, you're not alone. Just like you, my wife and I have been thinking about buying a home for several months, and I'm going to break down the top 8 home buying considerations that you should weigh before kickstarting your housing search. Now, even though I said 8 home buying considerations, be sure you watch all the way to the end because I'm going to throw in a bonus tip and you want to make sure that you don't miss out. So here are the 8 things that you should consider, and all of these 8 things fall into 3 broad buckets: cheap money, trouble for sellers and builders, and downward pressure on home prices. By now, I'm pretty sure you've heard some chatter about how low mortgage interest rates are. But just how low are rates right now? Well, according to data from the Federal Reserve, the average interest rate on a mortgage across the United States is the lowest it's been in the past 30 plus years. The average rate on a 30-year mortgage has been declining since the 1980s. And right now, they're down to 3.07% as of June 2020, which means as long as you can qualify for a mortgage, there's cheap money out there. Existing home sales report. Median prices on existing homes have actually increased 2.3% since May 2019. However, if you look at the number of homes sold, they're actually down 26.6% versus the same period last year. To put things into context, at the start of the last recession in May 2008, sales were only down 16.6% versus the same period in 2007. So this is already worse. Also, if you look at May 2009, about 1 year after the start of the 2008 recession, prices were down a whopping 21.5%. So why should you care about the existing home sales report? Well, because it means less homes are selling, which means less buyers, and for you, less competition. And most importantly, recent history shows that within the next 12 months, prices are likely to drop significantly. The pending home sales report. Luckily, we also have a forward-looking indicator, and it's called the pending home sales report, which is based on contract signings. So basically, it gives us an idea of what homes have gone under contract and are expected to close in the next couple of months. Year over year, pending home sales are, you guessed it, down 5.1%. Consideration number 4, the housing starts report. If you're interested in purchasing a new construction home, housing starts is something you definitely want to keep an eye on because home builders use this as a gauge for the market appetite for their new construction homes. Basically, it's a gauge for when the excavation starts for the foundation of a new home. And when housing starts are down, home builders see this as an indicator of less demand for their product, which potentially means you could see some discounts, some design incentives, or perhaps zero lot premiums. So to put things into context, in May 2020, when the economy started to reopen, housing starts were down 23.3% versus 2019. Now, if you compare that to what happened during the 2008 financial crisis, you'll see that we're almost spot on to where things were at the same period during the start of the 2008 financial crisis. Which, in my opinion, means that things are only going to get worse, given that unemployment is already more than 300% worse than it was during the last recession. The peak of the last recession. This month, the additional $600 of weekly unemployment benefits are scheduled to end. And why does this matter to the housing market? Well, for a couple of reasons. Once it happens, that means less monthly income for homeowners that are unemployed, making it harder for them to stay current on their mortgage payments. Secondly, it means the unemployed will spend less money in the economy, which means less money for businesses and potentially more unemployment. The end of the federal moratorium on evictions. One of the little known facts about the CARES Act is that it provided not only 360 days mortgage forbearance, but also a temporary freeze in all rental evictions if the property is federally subsidized or if the rental home is financed with an FHA loan. Remember back during the 2008 financial crisis? Remember how long it took for some people to find a job? Over a year? Well, this time around, what do you think will happen to all those people that lost their jobs in the service industry? Sadly, it's probably going to take them a very long time to get back on their feet. In some instances, even longer than a year, which means come April 2020, when the mortgage forbearance ends, we'll likely see a flood of foreclosures hit the market. So if you're looking for the best deal on an existing home, come early next year, there'll probably be some bargain prices available. It also means that the rental evictions is something to keep your eyes on, because that can negatively impact neighborhood home prices. And now for our final consideration before we get to our bonus tip. Remember all those companies that got the bailout, the payroll protection program? Well, as part of the terms, they have to keep their employees until the end of September 30th. But that doesn't mean that they're waiting until September 30th to give layoff notices. Actually, a number of them have started giving layoff notices effective October 1. Sadly, that means some folks with conventional mortgages will fall behind on their mortgage payments, and the rise in unemployment will probably affect the new home construction market. And now for our final bonus tip. Remember the CARES Act mortgage forbearance program that we talked about? Well, it doesn't apply to homes financed with a conventional mortgage. So if you're looking to buy a house before March 2021, when the CARES Act mortgage forbearance program ends, you may want to consider holding out for a foreclosure. A foreclosure on a home financed with a conventional mortgage. Well, that does it for this video. If you found the information helpful, please go ahead and smash that like button and give us that thumbs up. And don't forget to subscribe. It definitely goes a long way to supporting the channel. Also, I want to hear from you. What questions have come up during your housing search? Feel free to go ahead and leave me a comment down below, and I'll try to answer those as soon as I can. Thanks for tuning in. See you next time.